Hi everyone, let's go over my bullish and bearish micro Elliott Wave scenarios on Bitcoin, starting with the micro bearish scenario where we're looking for a double 1-2 for continuation to the downside. Currently, price is finding support at the target box that we had over here, which is now turned wide between 37.1 and 37.2k, with the most important level in this target box being the daily naked point of control. If price starts to close candles below this target box, then I'd be looking for the move to the downside where we have these dark blue target boxes here for support 36.4k to 36.6k and down here 36.1k to 36.2k. Now in this scenario, we then have this wave 2 being a complex structure and then a W, X and then a flat in a wave Y. Wave W did retrace to the 886, but the corrective pattern, the end of wave 2, ended around the golden pocket. Then price moves to the downside in another wave 1 here, 1, 2, 3, 4, 5, followed then by a 3-wave corrective structure in a wave 2, which retraced to the 382. Less common for a wave 2 compared to the 05 to the 786 area, but we did have very strong bearish CVD divergences, which I'll show you in a second. Now in this particular scenario, we're then looking for continuation to the downside where either price continues to the downside or you get a flat structure in an ABC for then continuation to the downside. However, if we think about a flat ABC with currently this move to the downside, then the target for a flat over here in a wave B is already getting very extended. The most common target is between the 1.236 and the 1.38, 2 candles closed inside that area, but now price is moving on top of the 1.618, which is a less common target for a wave B in an expanding flat for then an A, B and then a wave C for a move towards the downside. However, if price does come to the upside and find support over here, we should not forget about this flat scenario for then continuation to the downside, right? As usually, the 05 to 786 is the most common target area for a wave 2. Now, if we then go to the bullish scenario, we're looking here for an ABC. So we have a 3-wave structure in an ABC, and then we want to see a move towards the upside. Most common target for wave C is between the 1 and the 1.236, taken from the high to the low of A to the high of wave B, which is where price is at the moment. Here it is important to not close candles below the target box over here, right? Find support and mainly also see some local bullish CVD divergences, as currently with every little bounce that we had, price continuously showed bearish CVD divergences. In this scenario, the 886 becomes important even though wave B ended over here and then the same complex structure of a WXY. But an 886 in general is a rare target for a wave 2 and a common target for a wave B or a wave X, increasing probabilities, and the move to the downside is a wave C or a wave Y, which therefore increases probabilities for a move to the upside. The only problem that I have with this being a wave C is this range over here. Because if we look for a wave C, we want to see a 5-wave structure to the downside, right? Just like wave A over here, 1, 2, 3, 4, 5 on the 3-minute time frame, very steep, sharp move to the downside there. But if we look at this wave C to the downside, then what we see is also a 5-wave structure here, but then we get this, right? And if we look for a wave C, this range here does not really match with anything that we had en route to the downside over here. So the probabilities are a bit higher that this is a separate structure which is not connected to this move to the downside, which increases the probabilities a little bit for the double 1-2, even though this second wave 1 is incredibly long compared to the first wave 1, right? So in this scenario, what you do want to see is of course a move towards the upside, not in an A, B, C and then a move down with bearish CVD again, but you want to see continuation to the upside to take the highs, double top over here, and if you take the double top over here, I'd be looking for 38k as well. If we then look at the CVD divergences, we have these bullish CVD divergences, which has continuously been building. Already with this low, we had the same bullish CVD divergences, and then with this one, and now with this one. The problem is that so far with every little bounce, we also get the bearish CVD divergences, right? We had bearish CVD here, then we had bearish CVD here as well, also even more locally. and you really want to get rid of the 3 to 5 minute bearish CVD divergences locally, right? With this bounce to the upside, you don't want to see more bearish CVD divergences, and that is something that's very important. If you do get a bounce here, then keep an eye on the 3 minute to 5 minute CVD divergences locally, because you want to see bullish CVD divergences for support, right, of a move towards the upside. Now this is the 3 minute CVD. Of course, we just made the wick over here, so there is nothing to see, but keep an eye on those divergences. The moment you see more bearish CVD divergences stacking, probabilities increase for a move towards the downside. Now we do have news today at 8 p.m. Central European time tonight, so that can increase the volatility, so make sure you trade safe around these hours as volatility might increase, right? And then finally, if we look at the probabilities of the different scenarios, then I ride maybe a bit bearish slash neutral, right? So a little bit of a sum up over here of different arguments of basically different things that we're seeing on the chart. That currently, first of all, price is at support, and support is support until it is broken. As long as we are not closing candles down here, it's bullish, right? Because support is holding and we have the potential to move up. The moment candles close here, probabilities increase to move down to the dark blue target boxes. So far, each bounce has been countered with bearish CVD divergences here to the downside, which is something we have to keep in mind. Now, all of these bearish CVD divergences have already played out, so these are now neutralized, leaving the bullish CVD divergence that we have here. But as mentioned, it is important that we also see bullish CVD divergences on the 3 minute, higher lows on price, lower lows on the CVD. The moment you find support here, move to the upside, create more bearish CVD divergences, it really increases probabilities for a move to the downside. And hence the reason I ride neutral, because we are at support and the reaction is so incredibly important. If we look at this wave C, the look of a potential wave C here is a bit off right now. Commonly, wave C is longer in time than a wave A, and this being then a potential A, B, C. The problem for me with this wave C, right, is that this would have been a nice wave C, and then we got this range, and this range over here does not really match up too nicely with anything we have here. Possibly you could say we got a 1, 2, 1, 2, 3, 4, 5, and then another 4 and a 5 to the downside. That has potential, but that is also why I ride bit neutral. We're at support, it has to hold, right? For a wave C, this is where you want to see the bounce and you want to see a move to the upside. Losing the support box, probabilities for the bearish scenario increase, and if you have a bounce with more bearish CVD divergences, the bearish scenario also increases. Bounce with bullish CVD divergences, and we could be looking for continuation to the upside. So currently, while recording, it's pretty much neutral because we are at support, and we've been talking about this support for a while now as price started to range, especially also in the morning, of course, with the morning update, right? We mentioned this over here. We are now at support, and the reaction is going to decide what is going to happen. So make sure you trade safe. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.